Hello everyone and welcome to my morning report analysis videos with me, Richard Perry, market analyst at Hantec Markets on Wednesday, the 6th of March. We've got a fairly slightly risk negative outlook today. Nothing too significant driving that move. It seems as though the markets are sort of in wait and see mode to an extent. Although what we saw yesterday was the S&P 500 falling into the close, and then futures are similarly lower today. You had overnight the Australian GDP data, which only mildly missed to the downside, but certainly reflects the fact that the Australian economy, which is considered to be a bit of a risk proxy actually for China, is under pressure, and growth is falling away. So that again sort of plays into this whole narrative of the global cyclical slowdown, and that sort of helps to drive the sentiment, which is turned a little bit risk negative. And you can see that through the fact that the yen is mildly stronger. Broadly speaking, that's hitting across the commodity currencies. Certainly the Aussie being the big underperformer, down 50 pips, 0.7%, and generally speaking, the dollar, US dollar, is outperforming. Sterling is also weaker, and again, sort of perhaps playing into that move as well. But generally speaking, we've seen a sort of mildly risk negative outlook with equity markets pretty much lower today. We haven't got a great deal of data today, but we do have the ADP employment change at 1:15 UK time. A little bit of a possible indication for payrolls on Friday. 189,000 expected. You've got the US trade balance also at 1:30. We're expecting to see the trade balance coming back to negative 57, or a deficit of $57.9 billion. So again, that's pretty significantly large deficit number. And also into the afternoon, we've got the Bank of Canada giving its rates decision. No change expected there on the Bank of Canada rates decision. There's a whole number of reasons why you're not really likely to see any move on the Bank of Canada, possibly until at least later this year. Because just again, sort of fears over growth, inflation not really doing a great deal, and yeah, it still seems to be Bank of Canada on hold there. Now, EIA inventories, surprise drawdown of 8.6 million barrels last week. Expected to build 1.4 million barrels again this week. So that just also we've got a Fed Speaker John Williams today, who is a centrist on the committee and is a voter, so he's speaking at 5 o'clock UK time. Now, my chart today is the Australian dollar, which, in the wake of this, the RBA and also, in the wake of the RBA and also the disappointing growth numbers today, we've seen the Australian dollar breaking down below 70.55, which is that February low, down at 70.30 now, and you can see this key floor around 70.20. This is a big floor, actually. Basically, just sort of ticked below that, went below that in January very briefly, but spiked back above it. So this is actually a floor that I believe is still a basis of support, and if it closes below that today, it really does show the deterioration. But look at the momentum indicators. We've got the RSI back below 40. That's confirming the move of the breakdown below that February low. You've got the MACD lines very, very concerningly crossing lower underneath neutral. Also stochastics in negative configuration as well. So certainly looks as though this is a chart that is on the brink of breaking down, a key downside break, and that would then open the 68.25 level of support that was the key reaction low back from all the way back in Q1 2016. So this is the Aussie dollar on the brink of a significant downside break, and a close below 70.20 in the 69 certainly would confirm that move, and would look rather precarious from there. So in terms of your selling into strength, you've got the hourly chart, which shows lower highs, lower lows. You've got the downtrend intact. You've got the resistance that comes in. Key lower high coming in at 70.95 area, but 70.65 was old support that is going to be at a basis of new resistance on an intraday basis. So any rallies towards there that unwinds the hourly RSI back towards this sort of 55 to 60 area seems to be a chance to sell. Back towards neutral on the MACD line seems to be a chance to sell on the hourly. So any rallies on the Aussie are now a selling opportunity. So I wish you good luck in your trading today, and I will speak to you later.